Hey guys, hope everyone's having a good evening. I just wanted to get started on this one a little bit early. I'm very excited for the upcoming week. It's something that we've been waiting on for almost a month, maybe even 2 months now. But kind of going through it step by step, right? I mean, we've been able to spot and, trade it to the best of our ability. I feel like distributions, just in general, but specifically for me, are a little bit harder to trade versus an accumulation. It's always a little bit harder to get into a short side position when the market feels like it's just super strong and it feels like every single rally just doesn't stop. A lot of those times too, if you kind of wait for the perfect timing, it feels like it slips away. And that's where it kind of comes into understanding the higher time frame targets versus where you're risking. And feeling not feeling that pressure of having the perfect entry. You guys saw it with Nvidia. I already did our trade recap on that, but not being afraid to take a second entry, we were able to capitalize a little bit on Nvidia. We were able to capitalize on SPY. But for the most part, right, we've been waiting for this little window that I talked about between February OPEX going into March OPEX. We kind of knew the downside was coming and then waiting for the right side of the curve, right, for this to now end up drawing back up to those highs. Just being patient for that, because that's definitely still going to happen in my opinion. How high it goes, we can speculate, but this is definitely something that we're looking at. And obviously the catalyst, it's widely speculated to what it would be, but some kind of stimulus or easing from the Fed would be the best guess. Kind of everything is aligning from the labor market, inflation data coming down. On top of that, with the market drawdown that we've seen as well, that they're not going to ease rates, at 6,100 or if you guys don't know, the S&P or the Nasdaq, 6,100 was kind of the highs, maybe 6,120, and now we've seen essentially a 12-13% pullback on the Nasdaq, right around a 10% pullback on the S&P. So everything's kind of aligning, right? The market's cooling, obviously with the market coming down, the stock market that is. That takes a lot of money out of the economy, right? So there's a lot kind of playing into the favor of the Fed cutting rates. I think the probability rate right now is 30%, going into the FOMC decision on Wednesday. But overall, right, I mean, just kind of noting what a distribution is and when does it end, right? We always have to kind of talk about that. And really, when the distribution ends up playing, right, as we noted, it's up here, kind of understanding that it doesn't have to sell on continual increased volume, right? All you need to look for is that when that high volume kicks in again, we have to note that as a footprint candle, right? So as you guys can see in this distribution range up here, the highest volume kind of came from this initial buy climax here, right? That kind of fake broke out through the high. We ended up pulling back down to the bottom of the range. We had another high volume print here. We ended up pushing back up to the highs again. This was kind of like our up thrust. And then we had our UTAD breakout here, right, that broke out on low volume, which is kind of what you want to see. And then from there, right, we ended up kind of capitulating and selling on high volume. This is pretty much, I would say, a picture perfect distribution schematic up here. Now what we're looking for is it to kind of continue selling and then one more high volume anomaly print or a footprint candle kind of signaling that, hey, the distribution is now done from this range up here, and now that sell campaign is now finalized and a buy campaign is beginning. And that's usually the signal for our higher volume, right? That the buy campaign is beginning, the sell campaign is ending. And I mean, what perfect way to have that other than a hammer candle on the weekly with some of the highest volume that we've seen, right? Very telling in my opinion. And I think it's ready. If we're going to talk about kind of how this is playing out, right? I mean, it's not exactly how I thought it would go, right? Usually people think you need some kind of catalyzing low. If we tie this back into August 5th, right, that's the first one everybody thinks about, where we had, this initial low right here. It ended up sweeping, which was our second low, and then we had a third low, which was our three lower low, with the highest volume being here, right? If I can just circle it real quick. Did the wrong one. I messed that up. My bad, guys. Right here. Right, highest volume, big bar. But this was a little bit different in the sense that this pulled down into a really easy gap, right? This time around, we don't have as easy of a target in terms of us pulling down into a gap fill, right? There's no gap fill. I mean, the only one that I saw was like right here, right? The close at 471.44. And it technically pulled down into that. But if we take a look at kind of how this is structured out, right? I mean, we had some really high volume buying that came off of this doji candle here. right, with this little black line, and then we kind of broke underneath that, and then we got a second low right around here with some of our higher volume, and then we also got a very, very small low kind of around this general range here. So we could argue that this is the same schematic, just not as, I would say, not as I want to say capitulatory. I don't think that's a word, but it's not as like violent as what we saw on August 5th. This is a lot more controlled. This is a lot more methodical of selling and with buying occurring with very, very shallow lower lows being made. It's not as extreme as the August 5th, right? It's just very, very controlled, in my opinion, to get to that 10 to 13% range. This feels like, yeah, controlled selling. If we take a look at the VIX as well, I mean, we kind of saw this throughout the way, right? VIX never really had that blow off top. It's been controlled selling. Every single move has just been very methodical up into this high up here around 30. And then once we hit 30, tweezer tops, and now we're beginning to kind of sell back down. And then if we take a look at the hourly here as well, I mean, we can easily see the stair-step fashion this can kind of go through, right? I mean, we noted one back here, right? So at 21, we saw another one back here, right? Like right around 23. Another one here, right? I mean, there's kind of a slow walk down, in my opinion, or stair step for volatility to kind of dampen as we made our way down into a very, very volatile event with FOMC, right? This can still go even further to the downside, in my opinion, and just kind of reset. But overall, right, kind of using VIX as a barometer to understand that this has been controlled selling. Now, if we go back to QQQ, right, I kind of talked about how it does kind of have a 3 or 2 lower low setup here, just not as obvious with a lower gap to the downside. But if we take a look at our fibs, which I've been encouraging everybody to do, it's been pretty easy, right? If we take our major swing low, let me just reset the chart really quickly, right? Major one is obviously back here, August 5th. That was our last major one. Pull that from our high, or I'm sorry, our low to our high. We basically pulled right back down into a perfect discount zone, right around the 618, right? I don't think it's any conspiracy that we kind of bounced with our highest volume right off of the 618 with a hammer on the weekly, right? So now really it becomes very simple. All we're really looking for here is a trigger up, right? I still don't mind one last pullback to kind of come back to these lows right around here and get one final accumulation. Especially off of some kind of news where a lot of people are going to be super bullish going into it. I wouldn't mind one last pullback and then getting a launch pad off of that. But really, the trigger is super, super simple. We talked a lot about the NWOG. It's really easy to see on the weekly as well. So let's just draw everything out again. Let's delete the 618 here. Actually, let's delete the 382 and the 236. So we'll keep the 618. Take a look right here. That's the open on the weekly, and then the close is right there at 492. We'll just round that up. Super easy, right? NWOG, right? So breach over 483.45. That's the open. It should close into 492. That's the NWOG that we're targeting, that I've been talking about for, I don't know, since the beginning of the week. Very, very easy trade here, where it really confirms if it breaks above 483, basis 483, develops some kind of bid support there. This can really launch into 492. And then from there, right, obviously, I think that could be the start of the uptrend. Maybe like a pullback, right, and then kind of a breakout again, and then start making its way back up. Sorry, I keep hiccuping. I don't know why. Yeah, probably 500 would be the next level. If I'm just kind of looking at this, right, this was the last kind of, I wouldn't say the last, but this was the bottom of that distribution zone up here. So I could see 500 being a big level that needs to be reclaimed. If it can get above 500, probably a pullback and then continuing to trend up. Long story short, right, we should kind of have all of this lining up with something like this, right? If I just jump into this chart, get rid of the EMAs, right? This is exactly how I have it, right? Pretty simple. NWOG fill or NWOG open at 483. Right, breach into 492. Obviously, I think we'd sell back down, and then looking for us to kind of break above 499.60, which is this progression gap here. Like I said, this is the distribution low, so this would be a big spot for buyers to then reclaim. If we can claim that, right, I think this is going to mark all the way back up, in my opinion, back up to 573. Probably go for another high here, and you could argue that this is just a weekly schematic playing out, right? This would be kind of our buy climax here. This is up thrust, and then we could have a UTAD breakout over here on the right-hand side. that lines up for like a sell-off kind of going into Q3, Q4 of 2025, right? So that's pretty much what I'm seeing for the S&P, just to break it down in the simplest terms, and really what I'm looking for, right? Now, if we are to gap down, right, beginning of the week, which is what I'm kind of hoping for, to be completely honest. I want a lot of people swinging calls, a lot of people max long into FOMC. If it ends up becoming a sell the news event, I really want to see this just pull back down into that 618 area, right? So just kind of redrawing that one more time on this chart. Swing low. Oh, sorry, screwed that up. We'll keep it there, and then we'll just redraw the anchor low right here, right? I want to see us pull back down into like 468. Very, very simple. If we take a look at the hourly as well, let's end up kind of pulling down this, right? It's super, super simple. It's the gap up that we just had, right? This would really be, in my opinion, a really bullish chart. If we could pull back down into this, then start to build out, right? Then crack above the NWOG open and then push to the close. I really think that this would be the ideal pathway for a long back up to the upside. Now, timetable for this playing out, I still think April is a good expiration, but May and June would be a lot more comfortable. I will say that, right? We want something that will be able to kind of extend this out into, I guess, like the early or mid parts of summer. And then, yeah, I mean, ideally from there we can start to kind of look and be bearish towards the highs up here. But kind of what I'm seeing, if we get a gap down, it just kind of depends on how futures look on Sunday, and then obviously pre-market on Monday. That's ideal, honestly. But this is kind of the main setup that I'm looking for on Monday. Now let's jump into some individual names here. Let's take a look at MU and Google. Those are the main two that I'm really kind of focused on to pair with QQQ. Okay, Google is a little bit different, kind of the same concept. It did break under the 618 just a little bit, but it's pulled down into the swing low here, right around 163.90. This ties nicely into this little cluster or this volume shelf from way back here in like September, August, a little bit of October, where we had this nasty consolidation. It finally broke out above that. It pulled back and kind of based that zone and gave us, kind of like our major secondary higher low. And then as you guys can see, it kind of rallied and made a new high. And it essentially pulled down into that spot once again, right? And obviously it undercut it a little bit, but it's closing back above, and we're seeing long lower wicks to the downside that are closing back above. This name still looks good, right? As I said, if we kind of jump out to the weekly chart as well, right, you guys can see, right, it did undercut the swing low just a little bit. Long lower wick on the weekly, not the highest volume. It doesn't have that same look that QQQ does, but this name is very, very attractive in my opinion. And obviously I'm down like 46% on what I did start, but I still think it's okay. Kind of the pathway for this one is a little bit more strength though, right? I want to see this break into that NWOG, which is the same NWOG that QQQ has. So getting above 168.26, I then think that this can trade upwards into that 173.86 NWOG fill. Right, and then this name really kind of sets up if it can break above 175. 175 is this progression gap low from back here, right? Very, very simple, but if it can get above that, right, and give us some kind of extension, a pullback, and kind of hold or build some kind of support out from there, I do think that this has a clean pathway to trade up into this gap fill here right around 179.70, or we could just round that to 180. And I'd probably trim majority of those contracts because it does get a little murky. I've said this in previous videos where it does have a little bit more room to kind of go, right? We can look at this as kind of like the 182.85 would be our next level of resistance, which is obviously the progression gap high. You guys can see we consolidated against this for quite some time before breaking down. So maybe a secondary trade would be available if it gets above and holds 182.85, right? Then we'd look for it to trade up into the earnings gap candle, right? Or the earnings candle from back here on February 5th. And then that could give a pathway for like an earnings markup through the gap back up into 206. That's for another day, right? I just think that the pathway here is pretty clear for a move back up to 180. And those contracts would do rather well, and I would be looking to get out of those ones. But this is probably the second chart that I've kind of favored, tying into QQQ. And just waiting for that breach above 168.26, and then kind of looking for the fulfillment up into 173, and then conversely 179, right? So those are the main two, and then obviously MU. But MU is a little bit different. because we are coming into its earnings, which are going to be next week. And MU, I don't really have too much to talk about with this one. It just kind of comes down to earnings, which are on Thursday. But really good move here, guys. I think I reached a peak at like 80% on these, but really just we want to see it get above this 103 level. Obviously, this is a big resistance from back here, which is that progression gap. Obviously, sellers are likely going to be here, but if we can get above kind of base here, right, we could expect some kind of markup into this gap right around 108, 109. But the move we're really looking for, and ideally we get, right, is some kind of gap up from earnings above 114. It pulls back and bases 114, which would be our jump the creek, right? And then we could take even more ads, maybe not into the June contracts, but we can roll into something different and to look for the fulfillment of the 127 gap. But that's kind of scenario one. Scenario two that I talked about is earnings does sell us off all the way to 81.5. If that does happen, I'm probably going to take a huge position. I'll add into the Junes, the Julys. I'll take a big share add, and ideally that ends up kind of being our spring, and we have a very, very objective and very easy risk off of 81.50, right? It's just the low from way back here that I've been talking about for a very long time. There's no if, ands, or buts. If it breaks under that, closes under it on the daily, I'll be out of that name. Should be a very small loss if that ends up happening. But if we can get some kind of spring down into 81.5, pretty simple, right? We would just kind of look for the same pathway here. We would look for some kind of catalyzing low volume print off of that to give us the signal to go long on this one and take a large position. Right, it doesn't have to do, guys. We don't have to take this as soon as it hits the level. We can let the daily close. There's no rush, I guess is the best way to put it, to take a perfect entry on this one. We just need to see the daily look good or some kind of weekly candle, from next week, and using that as our justification to add in, right? And then from there, right, obviously, as I said, we want to see a lot of these levels get reclaimed. So, maybe a break above 89.70, a break above 95, pull back, hold 95, break up. Kind of the same exact thing that I have drawn here, right? This would just be a little bit longer of a hold, which is why I've been so adamant on taking longer dated contracts. But yeah, the shares will definitely be kind of like the biggest part of this if we pull back into 81.5. But chart looks pretty good. As I said, we got the downtrend line breakout. We broke through 95.66. We pressed up into 103 resistance, and these are the two pathways that I kind of see here. Obviously 127 is still the goal here. I want to try to hold this as long as I can up into that level. But yeah, it just kind of comes down to earnings with this one. But those are really the main three. If we take a look at Tesla kind of has a decent look here. It didn't quite fill the 230 gap that I was hoping for, but now it's pinched between this old earnings gap as well as the election gap. So it's in a tricky spot. But if it can get above the election gap here and kind of pull back in base 250-ish, right? I think that's 250. I think this has another pathway up into like 284. So we could be looking at an options trade here. I still like shares, if I'm being completely honest, for this name. I just think this is more of an investment versus something that you want to day trade, especially with the levels being a little bit murkier. But as I said before too, right, if we can somehow clear above 324 and kind of pull back and base this old progression gap from back here, obviously this is the level we bounced from that got the lower high. I think an options trade up into like 373 or 400 could be at play. That's where I'm a little bit more interested in the option side of things. But Tesla is another name. It's just kind of on the back end because this name has been beaten down. Obviously headlines on it. There's a lot of stuff going on with Tesla right now. But as of right now, this is more of just like an investment type thing. So back end of the watch list, but something I'm still watching. But from an options perspective, QQQ, Google, MU are kind of like my top three, and they have been for a while. And then Tesla's still kind of a share play for me. But if this can pull back in base 250, maybe take some more ads on the shares there, and then kind of look for a move up into 284, kind of break through 284. We want to see obviously 300 be claimed, which is a big spot here, as well as a psychological level. And then if it can somehow get above 324, right, I think that's a good opportunity for some options. So that's pretty much all I got for you guys. Next week, but we've talked about this, or I've said it a couple times on here now. So next week, is the week, right? We have OPEX, which is our large OPEX coming up on the 21st. We have Vixpiration on Wednesday, and then in terms of data, right? Retail sales is on Monday, which we don't really care about too much. Don't really care too much about Tuesday, which is obviously going to be building permits and housing. Wednesday's the big one, right? We have FOMC, where we're going to figure out the interest rate decision, as well as Powell's press conference at 11:30. And that will kind of dictate the market going forward for, I would say, the next 3 months or so. So really interested to see what ends up coming out of this one. But as I said, I do think that we get some kind of stimulus or easing from the Fed, whether it comes on FOMC or a little bit after that. I do think that this is what's going to start the uptrend going into June, July, and then June, yeah, I guess post July, kind of going into the fall. I think that's when we'll start to see some kind of decline or weakness leading into the highs. And from there, right, I think that this could just end up being kind of like a weekly schematic of a distribution, right? Where this could be technically, I guess the buy climax right around here. This would be up thrust, and then we can get some kind of UTAD, right, or another three-pronged triple top for a larger sell-off, kind of in the end of the year. So it's pretty much all I'm watching, guys. Very, very tight watch list, but I do think that this is going to be pretty sick if we can capture this. And this is why I've been so focused on this. This is why I've been so patient. And it kind of comes to fruition next week, right? And kind of leading forward after that. So I'll see you guys on Monday. I'll be on the chat a little bit more leading into Wednesday. Usually with these position guys, I'm not trying to avoid anybody. It's just I don't want anybody's opinions to sway my decision, especially when I think I see a home run pitch, which I do think I see here. Yeah, I know a lot of other people are kind of emotional or they post stuff to be funny. It's just I just don't like to see that stuff because I just want to be on my A game. So it's nothing personal. But once Wednesday kind of comes around, I'll still be here. I'll still be alerting my trades. But yeah, just know that I don't try to avoid you guys for any other reason other than trying to stay focused and keep my emotions in tame. So I'll see you guys on Monday. But yeah, very excited for the week coming up, and I hope you guys are as well.